Mr. Merlin Moore Johnson, how are we, sir?
Very good, thank you, Matt. How are you?
I am good. I'm very excited. We haven't done one of these taking stocks for a while, so it's about time. That said, the market's been a little bit quiet, not a lot of action going on. And we're perhaps going to talk about that today. I thought we would rip through a few different topics, so people can sort of chime in as they want, and give us their thoughts on some of the topics discussed, because it won't necessarily be fulsome, but at least it'll be interesting. So I have here, we're going to talk a little bit of macro China, macro US, and what we're seeing over there, and therefore what the implications are for copper, gold, and iron ore specifically. It might riff off into things like lithium as well, I suspect. And then pop down to some of the Latin American countries, I think specifically Argentina, a little bit on Mexico. A little bit exciting on Mexico. You've got some thoughts, some conversations that you've had. We'll see what the implications of that are. That is, and then I think maybe we might even drop a few names.
We might drop
interesting companies and things that have been going on.
But perhaps just kind of to frame it, to kind of give a bit of context, why have we not done many taking stocks in the last few months? Well, I think there's kind of a twofold reason. One is that you've been doing more interviews than I have been doing. The market's been pretty weak. We've seen fewer companies coming through, kind of wanting to stick their head above the parapet and kind of go out and on a proper marketing kind of program. So in a sense, I haven't been doing as many company interviews in the last 6 months. And the other key reason is that I've been flat out busy running Fitzroy Minerals, which is keeping me extremely busy.
Good.
So that's the background. Right? That's the background.
Yeah, that's true. Hey, here's the thing. So yeah, it's true. I think the market has been quiet. I've certainly been focused on the bit of gardening on an industrial level here. Also holidaying, beautiful holiday down to Croatia. If you've not sailed down to Croatia, get yourself over there. It's absolutely stunning. Recommend that. But I think now, coming up to September, we're just about to pop over to Beaver Creek in a couple of weeks, just after the WNA in London here next week, and then following up that with Colorado Springs as well, with some of the bigger developer producers as well. So it's starting to rev up, but we also got to talk about some of these metals in the market and what's going on there. But yes, you're back. So Fitzroy, how's it going now? In fact, tell you what, why don't we just spend 2 minutes explaining to people what's happened there? Literally 2 minutes. Let's not get into it.
Okay.
What have you got?
Fitzroy, Canadian listed company, FTZ.V. We've got a portfolio in Chile and Argentina. We've got a beautiful high-grade copper gold asset in Chile called Polymet. When that was last worked, the little adit went in there and got out material running 9 grams gold, 2% copper, and 17 grams silver. So that's a really nice asset. We've got some exploration in Argentina. And of course, on the 27th of June of this year, we signed an exclusivity with a private company called Ptolemy Mining. We're looking into making an acquisition of a much larger copper asset in Chile. We're doing the due diligence on that, and hopefully we'll be able to talk publicly about that in the weeks ahead, hopefully before Beaver Creek or at Beaver Creek.
Fantastic. And just to let everyone know, both you and I are shareholders of the Ptolemy Mining asset, and we think it's particularly good. But we've got to wait for public announcements before we can talk too much about it. But we're super excited about the future of Fitzroy Minerals as a result. And no, we're not drinking the Kool-Aid. We literally do. We do as we say and say as we do. Right. Well, let's get into this. Let's talk about the markets, because I think at the moment people are a bit confused. Metal prices running. The public company stock is not. Bit of a disconnect. What's happening out there? Should we start with China?
Yes, let's start with China. Obviously, there's the slowdown in China. I think if you look at things like copper or iron ore, change of hats.
Thank you.
The China property market slowdown has been very well documented, and it's been kind of gathering pace for a couple of years now. It's really coming home to roost. You're seeing much weaker iron ore demand. You're seeing these sort of the housing finishes in the property sector kind of tailing off, and basic demand for metals in China is down. And given that China demand has been such a key component of so many of the kind of base and industrial metals over the past 2 decades, it's having a really strong impact on the global metals market. What's quite interesting, though, if we just look at copper, and I've mentioned this a few times in the copper bottomed, and I've just recorded a new copper bottomed. What's interesting is that the supply picture on copper is so poor, and new deposits are so hard to find, and the big companies are struggling so much to lock in their future growth. I've just been through the Freeport quarterly, and I've been through the BHP annuals. The BHP see no growth in their Chilean production kind of hub over the next 15 years. Freeport is kind of working as hard as they can to get towards 5% growth in copper production over the next 4 years. It's very, very tight. They're finding it really hard to produce. And of course, we've had lots of, we had Cobre Panama, we've had big mine expansions or construction decisions pushed out and delayed. And so what happened this year in the copper market was that the Western hedge funds all said, right, we're short copper, we're going to invest on a financial basis. And that really took the copper price up to about $5 a pound. Meanwhile, in China, there was very weak demand. And the Chinese traders were going, well, how come everyone's buying copper when we don't need copper here? And what we've seen is that has gradually unwound since May. The finance guys have pulled out of the copper market and leaving the copper market slightly exposed to its kind of fundamentals of supply and demand. And what's interesting is that with the weakness in China, even with the weakness over the last year, 18 months, actually copper demand globally is still strong. So those mega trends are there. The US economy has been picking it up. People are, countries and governments are still pushing the kind of energy transition demand drivers of wind and solar and electrification and EVs. So actually the copper market has tightened up, and that is why metal prices have popped from 390 to 425 or 428 is what we're seeing at the moment. So copper looking pretty robust, particularly medium term and long term. Iron ore, not so strong. And I'm hearing from my contacts in Australia that actually the big guys, the Rio Tintos and the BHPs of this world, are probably going to just keep producing. Their margins are so great on this. They actually see this as an opportunity for kind of a bit of a reset across the industry. If they just keep producing and Vale keeps producing, what you're going to do is the prices are going to come down. You're going to squeeze out all of the marginal guys, or all of the kind of expansion plans that are in place from the few smaller iron ore producers that exist outside of the majors. So this is it feels like a bit of a kind of a clean out time, lower iron ore prices coming, which may of course weigh on the valuations of companies like Rio Tinto, BHP, the big guys. I think they're going to probably have a worse run of it than the companies perhaps which are more geared to precious metals or even the thermal coals, the Glencore's, perhaps the Anglos. So I think there's a trade at the top level. So I find all of that quite interesting.
It is interesting, and I think let's kind of maybe bounce into the US, and we'll come back to China sporadically during this conversation, because obviously it's a kind of big driver in terms of the economics, pricing, funding, and all of those wonderful things. So what are we seeing in the US market at the moment?
Three really interesting things. Number one is that the US economy has actually been the motor for the world in the last 12 to 18 months. And when you see cable demand, wire demand in terms of copper, it's coming from the US, not from China. The US economy is just going gangbusters. It really is. And also global growth is pretty good, ex-China. So that is all positive. What So that's interesting point number one. Interesting point number two is that there's a lot of nervousness about market valuations, about the elections coming up, about the kind of potential for recession. There are a lot of people saying, "Oh, it's good now, but we're not sure what's going to happen in 6 months, 8 months time." And that's been a theme for 2 years, but it feels a little bit more real now. I mean, I don't know if you saw Nvidia put out results last night.
Yeah.
Strong growth, stock down 8%. So it just feels a little bit toppy. And then the kind of the third element of interest in all of this is that since COVID, when every single major economy was printing money at the same time, and they're all saying, "Oh no, it's not inflationary." Of course, it is inflationary. It does devalue fiat money, and that is why you see things like gold performing well across all currencies. Every single fiat currency is losing value relative to gold. So good for gold. Questions about the market strength and U.S. economy is still going gangbusters, but we've still got those questions for how long can it keep going?
Yeah, for sure. We haven't really sort of talked about Europe in there, but hardly a huge producer of these metals, but a huge consumer of these metals, for sure. I mean, do you have a view on the sort of European markets? We've seen a few new IPOs in AIM recently, but it's hardly encouraging.
Hardly encouraging. And when I look at Europe, I guess my vision is kind of slightly clouded by the energy policy. I see what the UK is doing. I see what Germany is doing. They're essentially driving these economies off the cliff in terms of, if you look at what the energy policies are going to be doing in terms of promoting intermittent and unreliable power sources, where you have to build these huge capacities to get a small amount of energy, and then you have to have a secondary, reliable, dispatchable power grid system. So you're just piling on cost on top of cost on top of cost. You're doing nothing for the environment. You're impoverishing Europe. You're enriching other countries. You're destroying your industrial base. It's just like kind of, oh my God, how bad can it get? So European consumption will continue okay for a bit, but I see it as being an increasing irrelevance. Oh, and just a little aside, I went to a mining dinner in London, and we were 50 or 60 mining executives all talking, having a kind of a good old discussion about resources sector and a good catch up and networking session. And one of the debates that was kind of aired publicly at the end was talking about the future of the UK mining sector. And my views were that we haven't got the skills or the awareness or understanding about primary basic materials. People just don't understand how the world works and why it's important. And then crucially, our energy costs are going to be so high that it's going to be almost impossibly uncompetitive to build a mine in the UK, because mines take a lot of power. You need to crush, you need to process. And so unless the grades are spectacularly high, you'll be facing a wall of disinterest and lacking of permitting and regulatory support from the authorities, plus a impossibly high energy cost. So geologists and mining engineers, get your training in the UK and then work overseas.
Right. Okay. The brain drain continues. Good. Just what we need. I want to bring this back to copper, gold, and iron ore, because that's really the kind of overarching thematic here. We're just trying to understand some of the moving parts and variables to do with that. I'm going to start with copper. And I don't want to go over too much ground that you'll have covered in the Copper Bottom session, which should be out later today. But I do want to talk about some of the things that you've kind of discussed, which is right. If we look at some crude numbers here. So from 1993 to 2023, 239 major copper deposits discovered. Right. It suggests there should be a lot of copper out there. So something like 1.3 billion metric tons, apparently, right? Recent discoveries between 2019 to 2023, 4. So of the 239, four of those since 2019, right, containing 4.2 million tons of copper, right? So things are changing going forward. And one of the things you raised with me a couple of days ago and were pointed to me was maybe the use of technology can solve that problem. But I think you kind of crushed my dreams there, and I hope that might be the solution, because you've got a bit of data, which you're. I think, did you talk about yesterday, or maybe we can talk about?
I did touch on this in copper bottomed. Essentially, lots of mining companies are chasing kind of leaching breakthroughs. So you've got Rio Tinto with their Newton technology, which is a kind of a bio-leaching one. You've got BHP's got their high sal approach. You've got Atalaya's got Elix. Freeports are chasing some leaching things. Really, the holy grail here is that what people don't understand about the copper sector is that oxide copper is like Wagyu fillet compared to old goat. It's just succulent and full of, it's a dripping roast, basically. It's really, really, really good stuff. So the oxide copper, if you can find oxide copper and produce it, it just reduces your costs and increases your margins. It's fantastic. It's what you want. Trouble is, oxide coppers are just the oxide layer, and then most of these big deposits are sulfide, so they haven't been oxidized. Oh, nice hat. Hi.
I'm just saying this to see if anyone's watching us. If one of our two listeners would notice the change of that. I was wearing a Beaver Creek one because we're there in a couple of weeks. I'm now moved to the Broadmoor, which is pretty much where the Colorado Springs project for developers and producers is. So I'll be doing this throughout and distracting you. So
well, great. Well, the producers and the developers will all be trying to. Their holy grail is being able to leach the sulfides, the chalcopyrites. But to do that, you can't wave a magic wand. You've got to either increase the temperature or the pressure. You've got to put in all kinds of stuff. Anyway, everyone's talking about a miracle breakthrough. I'm just not a believer, because
it's not just you. It's not just you. You do have data.
Well, yes, in the sense that there was a big report. There was a kind of a peer review of all of these new processes in 2019 by the Catholic University in Santiago, and they said people have been trying this for decades, and really what happens is you get success on an individual site-specific basis at the lab scale and possibly at the pilot scale, but it's really hard to translate into the industrial scale. And I see that time and time again. And you've got things like Jetty Resources, which is private, but no real change. So, I mean, good luck. Good luck. What I will say is that the Chileans are expert at leaching. They really, really know their stuff. And Gilberto, who we've been working with for the last 3 years in Chile, he's run various heap leach mines and operations, and he said that he's tried. Sorry,
who for?
Well, for Vale, and then it became he was working on an asset that was sold by Vale to effectively Sprott, and the leach pads worked really well. And he said they tried absolutely everything from bioleaching and every additive, and he said the key differential was salt. And if you look at BHP's approach, they're going for high sal. Basically, they're using an addition of salt. It just really helps the oxidation process and the of the copper out of the ore. And he said that he can, with that, it's quite possible to leach these kind of secondary sulfides like chalcocite and these other minerals which if you just do a kind of if you report soluble copper and token copper, a lot of these minerals don't go through to the soluble copper category, but he knows that they can be leached because it happens all the time in Chile. Sorry,
right.
Little granularity.
Right. So we're saying maybe technology is not going to be the solution here. And as you can only drill down so far, kind of like the guy outside right now. So I'm having some work done. Hopefully not too annoying for people listening at home. But Okay, so technology is not going to be a solution. You got to find more copper. I think the easy option that most companies go for is to continue to develop and explore around existing assets rather than allocate more capital. In fact, interesting stat in terms of early stage exploration budget allocation has dropped to 28% currently, which does not compare favorably to back in the 90s and sort of early 2000s where the capital allocation was sort of near 50-60% typically. So less exploration going on by the majors because it's inefficient. They're not very good at it. They'd rather let someone else spend, let companies go hunting for this stuff, go bust a few times, destroy capital value for retail investors all around the world, and then come in when there's something more definitive there, i.e. there's a resource that they can put their eye on and they can work out what the recoveries might be, what their payables may be, and that's the way they go. But that doesn't really help the sector. I think we're sort of slow walking into huge declines in most metals if that's the attitude, quite frankly, because there's not enough capital available to these explorers because they're not all very good at it.
Yeah, no, absolutely right. I just had a look at the BHP results, and they produce most of their copper from Chile, and they are predicting that over the next 15 years they're going to get zero growth really out of their Chilean assets.
Wow.
And they're putting all their money into maintaining production. They're not really looking at new stuff. Now, obviously, they've just bought with Lundin. They've just kind of done this deal on Jose Maria and Filo. So that is their growth plan. But from their existing assets, they can't see greater growth. There's that very good S&P report which came out a couple of months ago talking about how a lot of the exploration dollars going into brownfields. And I think another really crucial element of this is that mines now, these big copper mines, take 25 years to build. 25 years from now, it's 2050. And if all of the predictions say we need 70% more copper by 2050 than we're producing at the moment. So we need to go from 25, 26 million tons per annum up to about 50 million tons per annum. And yet it's going to take, you basically need to build, let's say your average mine is going to be 500,000 tons of copper production. You've got to produce another 25 million tons. That's 50 mines you've got to produce, and each one takes 25 years to build and costs $10 billion. I mean, it just isn't going to happen. So what is going to happen is that there's going to be a shortage of copper, and incentive prices have to rise because the grade's so low and the capital required to build these things. These are big infrastructure projects, multiple engineering streams. So the companies that kind of benefit are those that have got near-term production potential. They've got high-grade assets. They've got smaller footprints. They're not a massively high altitude. They've got good infrastructure. Obviously, that's what I'm targeting at Fitzroy. That's exactly what I'm looking at. Those kinds of assets, which are going to be able to provide near-term value, which are not just something which is going to get mined in 30 years' time.
I think the market dynamics. We're sticking with copper. We will get onto gold. We will get onto iron ore in a bit. I promise. Well, we'll try to see where the conversation goes because it's pretty interesting so far. So what he's saying there is basically Latin America, which accounts for some 55-56% of discovered copper so far, still is a very important part of the kind of the copper story going forward. Are we going to see companies getting funded to maybe look elsewhere? Asia Pacific, which is about 20% of discovered copper so far, or even in the US and Canada, we see lots of copper stories in the US and Canada, which so far only accounts for 10% of the discovered copper, but they just have not been able to demonstrate scale. And they are all coming a cropper when it comes to regulation, First Nations, licensing, permit, cost of doing business. My God, the list goes on. It's super hard at the moment. I was talking to an Australian chap about this morning. He said, there are, and he was in Western Australia, said even Western Australia, ex-gold, it's a very difficult place to do business. So, these juniors who are expected to go and make these discoveries, make these finds of potential large scale projects, they're under a lot of pressure, which isn't just about financing. So, what gives?
Okay, so what gives? We can talk about geography, but just before we do that, another key thing that I haven't mentioned is cost of capital.
Yep.
So the great mine building period by kind of Western industry was from 1990 through to 2008, the global financial crisis, when the capital was very low cost. Since then, the only big mines that have really been built have been financed by China, really. So if you look at even Robert Friedland's Ivanhoe Mines, Kamoa, that was paid for by China. So it is a Chinese build. The couple of exceptions, Cobre Panama, with First Quantum and Anglo have spent some, but basically there's a big Chinese mine built in Peru, Mirador in Ecuador, again Chinese production. They're the only people that have funded it. So they've got a different view on strategic minerals, and also they've also built out the lowest cost smelting capacity in the world. So 45% of global smelting capacity sits in China, and it's right at the bottom of the cost curve. So that no one around the world is going to incentivize to open a smelter. And in fact, in Chile, they're closing smelters because it's much more cost effective to go down in China.
When are you going to wake up? Because it's a case of like, who pays the ferryman, right? You're looking at China and complaining about them, and they get the blame if there's any economic woes. They get the blame if it's, competitive, slightly, aggressive stance that some people want to take. But they're the ones funding it, as you've just outlaid, not throughout the supply, throughout the supply and processing.
Absolutely, yeah.
Right, but and they'll take you to where you need to get to. But the expectation is that they're going to leave you there, and they'll control enough of the food chain, which will make life very difficult for you in terms of being able to make the margins you expect as a result. So no one likes to be in that position, but that's the hard truth. Until Western governments or Western institutions wake up, because we're not talking about, it sounds big in mining terms, but in terms of overall investment terms, these aren't big sums given the kind of critical nature.
Well, to replace the smelter fleet, to have a competitive alternative to Chinese smelting, Woodmac just did a report. They said you need to spend $85 billion in the US.
It's not a lot.
I was going to say it's quite a lot.
Well, it is in mining terms, because we have this very small-minded attitude to mining, as we don't look out the window. The truth is 85 billion. Who cares when you talk these big American banks? They're deploying way more than that on some quite transitory sectors, which and especially if you look at the amount of money going into technology and the amount of the success rate there, it just seems quite foolish not to be deploying capital into these things to take genuine control. Talk about critical mineral lists. They talk about, these minerals are critical, but then they do nothing about securing them. Nothing.
Copper is critical.
Yeah,
absolutely critical. Yeah, it's the arterial system for electrification in the future of civilization. So
right. Well, and we better step away from that one before we start shouting at students.
Yes, but sorry. Let's go back to geographies. Where can
please.
You go?
Yes.
So Africa's a good place to work. There are exploration discoveries in Botswana, Zambia, Angola. Did I say Zambia? And the DRC. DRC comes with crazy political risk, and some companies are willing to go for it and some are not. Robert Friedland's played a blinder there.
I think like anywhere, I'd say even and I'd throw this in, I've worked in 25 countries in Africa. I know the continent reasonably well, and talking about, whether it be big infrastructure projects or large scale. If you know how to work in country, like anywhere, you'll do better than if you're coming in slightly naive and a bit green, because there's every which way but Sunday to get bent over and lose a lot of money. So, and this is
any country, really, any country,
right? So I wouldn't single out DRC in Africa, or quite frankly South America, or lots of places. The stands, which I've done a lot of work in as well, were quite interesting and colourful, shall we say. But if you knew what you're doing, did things the right way, you've got a better chance than most.
I would also say that in Zambia and Botswana and a lot of Angola, you're dealing with hugely thick sand cover, and in Congo, the Western Foreland stuff is all very deep. This is ultra deep drilling, dealing with extremely difficult conditions. So you're running on geophysical targets rather than anything else. So you're kind of slightly limited in your work. In Australia, of course, there's always prospectivity for copper. Again, you've got the permitting risks. The two copper and gold assets that we've seen, kind of the big discoveries in the last couple of years in the Northern Territories, Winu by Rio Tinto, and Haverian, which is kind of was Newcrest and Greatland Gold, that's now Newmont and Greatland Gold. Both of those don't meet the kind of threshold criteria for the big companies. So Rio Tinto has just offered stakes in Winu and that's describing it as being suitable for a kind of a mid-tier or smaller mining company. And Newmont are trying to divest out of Haverian. So, for scale, you end up having to go to South America. Chile has changed its licensing laws, so there's going to be greater turnover of ground, and Chile is still massively underexplored, even though it feels it relative to Canada, Australia, and North America in general. There's massive opportunity in Chile still. And
right, but they say that people will still maybe hark back to the constitutional change, etc., change of government and so forth. But change for the better, I think, because I tell you what I found. I was going to a little bit of South American knowledge, not compared to you, obviously, but a little bit. I've done business in Argentina, but mostly around Africa. It's like a lot of this mining law needs to change because look, companies were coming in there, doing a land grab and just sitting there and doing nothing. That does nothing for the country. Does nothing for tax revenues, employment, and all those other derivatives that sit around companies actually doing stuff on the ground. So I think for me, it was good news on Chile. And I think more countries need to follow suit, quite frankly.
Well, talking about companies doing good for their country, I see you're wearing a Victoria Gold hat.
That was more. I thought we were going to get onto a technical conversation because in terms of all the challenges ahead, we sort of touched on it earlier, which is like, there's so many things that can go wrong with mining companies, and we're sticking on the I think today really on the kind of geopolitical and jurisdictional risks, but technical risks. If companies don't get that, it really helps the anti-mining brigade. It really we all get thrown into the same basket of, evil, nasty, dirty mining as a much easier argument as a result. So I'd like to say I don't envy people like you, CEO of mining, whether it be exploration or producers, the things that you've got to juggle with here, but you've all got a responsibility to do things the best possible way. And, because you are going to be held accountable.
Oh, absolutely.
Was like,
going to be held accountable.
It's not good.
But that's a wonderful thing about exploration. Yeah, I know we've got a lot of responsibility, but when you get a team kind of all looking to do the right thing, and in exploration, it just feels really logical and really intuitive and really sensible. I spend a lot of my time kind of managing expectations, both of employees and also kind of local residents, and we just go very carefully. It's a responsible job, but it's like raising a family. You're building a team, and you just do your best. So I take it incredibly seriously, but I don't feel that there's kind of any threat out there because every step that we do is kind of genuine, and we're just trying to grow the economy and grow the economic opportunity of the area that we're in. It feels very logical and natural.
It can do, but I know some companies are under a lot of pressure because the way the share price has been performing, the lack of available funding and shortcuts are taken. And the story, those stories are litter this sector. And there's lots of lots of damage done across the board. Today's not the day to kind of get into it. Maybe we'll do another session where we sort of look at maybe some of these shortcuts. We obviously, with our analyst notes series as well on analystsnotes.com, try our best to kind of point out where perhaps people are being a little bit loose with the data and perhaps a little bit economical with the truth, to try and paint the best picture, because they're incentivized to, or they're under a lot of pressure to do that. I get it, but you're just inevitably waiting for that fall to happen, because mining's tough. I think that's what we're saying today. Mining is tough.
Mining is tough. But can I also direct you back to the Chile conversation?
Yes.
And the kind of the change in the constitution. Just to be clear, there was a socialist government that wanted to change the constitution. They tried to change it twice and couldn't come up with a sensible approach. So they've kind of left it. There were congressional elections which actually took control away from the socialists and put it back in the hands of the kind of more free market parties. And so you could say that the kind of the Chilean legislative part of the government is now run by free market or kind of conservative forces. And so there's nothing radical that can come out of Chile in terms of its socialist government. And actually, Boric, the president, has had quite a lot of growing up to do and has realized, that's patronizing of me to say, no, he's encountered a lot of realpolitik and realizes that the economy of Chile is dependent on
I don't think it's a harsh thing to say. He's a young guy and full of those ideals. And like all of us, we continue to learn and grow. And he'll face roadblocks that he needs to compromise on to get around. And there'll be things that he's able to get through. It's the nasty world of politics. So but my point, come back to it's down to the mining companies who are guests in the country to work out how they navigate those hurdles, how they wait out the time. Sometimes it is waiting for a change of government or a change of party. Sometimes, but I need investors to understand those are the risks. Those are part of the risks that you guys are assessing all the time. And they, as investors, need to assess at the time too. And they can. And the great thing with investors is you can vote with your feet, right? As a CEO, one hopes as an investor that you guys are a little bit more pragmatic and honest and say, look, this is a shit show. We're off. We'll try and monetize it, but we may not be able to, or we'll wait it out. Whatever your strategy is, or we'll plow on through, regardless. I kind of don't care, but I just want a sort of honest reporting of that from CEOs, so I know where I stand.
Well, fun enough, that takes me kind of across the border to Argentina, because when I joined Fitzroy a year ago, when I first started consulting to them in May, they had this kind of early stage gold exploration asset in Argentina. And I reported back to the board and I said, it's really interesting. We've got a fantastic geologist who's made a huge discovery in Argentina on the silver. And his next thesis is this is where a big gold field is going to be. In these vein deposits, you need three things. You need grade, scale, and continuity. And we've only got grade at this stage, and it's too early stage. And I said, plus Argentina is Argentina. You've got this very, very difficult country where the window of opportunity to invest for me has always been a window of opportunity to kind of get out of Argentina. And so I've always been cautious about Argentina, and this gold project was very, very early stage. And then over the month, during the course of 2023, we actually managed to kind of flesh out some scale on the asset. And I brought in the two assets in Chile as well to kind of balance the portfolio. And this remains the earliest stage project that we've got, but gradually fleshing it out and actually looking quite promising now. And then, of course, Milei comes into Argentina. And I think there's been a change. Of course, Milei, with his kind of waving his chainsaw and his sideburns and his foul language and his kind of slightly toxic masculinity is kind of not everybody's cup of tea. But he has managed to get through. He'd only got 7% of the votes in Parliament, because he's actually kind of holding a minority position, even though he's president. He's managed to get through something called his base law. It's called the RIGI. It's the regimen of incentives for grand investments, or kind of that's kind of a transliteration. But anyway, it's the RIGI law. Basically, it's a fiscal stabilization and incentive plan for a 30-year period from the moment that you start a project. And I think it's transformational for Argentina. It's designed to bring in long-term investors on big projects. The minimum threshold is $200 million. You've got to, once you get qualified for the scheme, you have to invest over 40% of that $200 million within 2 years of the project approval. You've got to, if possible, put 20% of your capital to local suppliers as long as they can do the job and they're available. And I think this is a kind of a massive moment for Argentina. And I don't think it's a coincidence that it was a month later that you saw Lundin and BHP teaming up to develop Jose Maria and continue exploration at Filo. So remember that Chile had 100 years of mining history, but really was still pretty pre-industrial, kind of in the late 1980s, and then the big mines started being built. And they only reached 1 million tons of production, I think, in 1995, 6 or 7. And then they've been up at 4 or 5 million tons of copper per annum since then. And it's by far the leading South American economy.
So
so I think this is kind of country building stuff for Argentina. And coming back to, where are the big copper deposits going to come from? Where is the growth? For me, it's Chile and Argentina, and it's not going to be North America because of its regulatory hurdles. It's not going to be Australia because it's really hard to find the scale. So I think it's still going to come from South Latin America, particularly Chile and Argentina.
Well, I guess some of the we write a lot about copper on cruxinvestor.com, and people should go there just to kind of get some macro content, rather than just look at the company stuff, because you made some good points earlier. The kind of discovery through to production time used to be sort of 12, 13 years up until about 2010. And after that, they've jumped up to about, I think it's 18 years for the mines, from 2020 through to 2023. It's getting harder out there, and longer exploration, permitting, study, all that kind of stuff that we've talked about there. But one of the other things I think is worth pointing out is, I mentioned a number earlier, which was the sort of 239 major discoveries since 1990, right? 148 of those are not yet in production. Does that mean, or what could it mean? Could it mean that there potentially a whole bunch of copper coming through? We don't understand the economics, obviously, and we don't understand if any of those, some or any of those, will actually get into production. I think what the other numbers, like 120, 121 of those have yet to actually complete their feasibility study. So they're still a long ways off. With the copper market, we're I don't want to be accused of drinking the Kool-Aid. I know, we've got a copper company here, but I need to understand if the thematic holds true in terms of the supply demand fundamentals, in terms of, is there a kind of massive tidal wave of copper coming to the market if people can get these things through the feasibility study stage, or is it just a case of they've taken them as far as they can take them, and actually the reason that they're not in production yet is because copper price needs to be significantly higher, or there are other barriers in the way? I mean, how do you really view this?
All of the above. I don't think there's going to be a tidal wave of copper supply. The market needs every scrap, every mine to come in and to feed the beast, because copper demand is just relentless, and you've got AI and EVs and everything, and just kind of economic growth and urbanization and electrification, and the demand drivers are there. So there's a real need for every bit of copper supply. Yes, I hope the leaching companies can deliver the leaching technologies, but I don't think they will. A lot of those copper deposits that have been discovered are deeper or lower grade. Therefore, you need higher metal prices. And if you look at the copper price divided by the gold price, if you look at copper prices in real money terms, it's actually been falling by over the last 20 years. Plus, cost of capital has become much more expensive. Plus, the regulatory environment is much more difficult. In essence, it's like looking at the uranium market, or these things are inevitable. You know that the price is going to change over the long term. So you want to be in a quality copper story that's able to allocate its capital sensibly, or even better, create value through the drill bit, discover resources, discover tons. That's how you're going to get your copper growth. But essentially, the copper price has to be a lot higher. We're sitting at $10,000 a ton, $4.25. Should it be $15,000 a ton? Should it be $20,000 a ton? Either way, those are the incentive prices. It might need to be $25,000 a ton. Copper prices just have to go up.
Yeah, that's true. I should say that I did know the answer to part of that question, which I think 15 of those 239 companies have finalized construction plans, etc. So not a lot basically is at the point of coming through. Right, copper, we love it. I think people get it, and also listen to today's Copper Bottom show with Merlin. Well, I guess by the time this comes out, it'll be yesterday's show with Merlin. Coming back to gold, let's go to gold. Over 2,500 for a okay. I'm going to say sustained, but okay, for the last couple of months, it's been 2,500. That's very, very encouraging for the producers. They're putting money hand over fist. They are making acquisitions of equals so far. It looks quite good for gold if you're a producer throwing off cash. Everyone else, not so much yet. What's coming down the line?
What's coming down the line? I've always liked gold. It's sound money. The reason why there are so many gold producers is because, gold explorers and producers, is because it's a high value product, simple metallurgy, low capex. It's the kind of thing that a relatively small mining team can build and do on an independent basis. It's a very fragmented cost curve, so you can always you've got no pricing risk really. You just slot into the cost curve wherever you come out. Many reasons why gold is the go-to company for exploration CEOs. It's literally money. You can through exploration you can create value, you can create money. It's just totally fantastic. Many people dislike it because it's a barbarous relic and doesn't pay interest, but I think that's missing the point. Where are we in the market? And perhaps this feeds just right across the sector, but the gold is always a kind of a good proxy for the wider sector, is that the companies that have money are doing well and the companies that don't have money are struggling. The wider financial markets and the institutions, the funds that invest in scale want liquidity. They want the ability to move significant amounts of money in and out. They hate illiquid stocks, and therefore explorers trade at a discount. Anything under $200 million is going to struggle, whether it's a copper company or a gold company, in terms of $200 million in market capitalization. The way that these companies are getting financed normally is through high net worth individuals, investors, family offices, people that take a shine to the company. My view is that these companies, these smaller sub $200 million companies, have to have absolutely everything going for them because they don't have the liquidity. So you've got to have everything in place apart from the liquidity, and that is the opportunity, because you can take a $20 million company or a $30 or a $40 or $50 million company and turn it into a $200 million company, and that is where you get your multiple, because the assets are fantastic in a lot of these companies. A lot of them are not, and I've got a few favorites at the smaller end. Two gold companies that I like.
Have you now? Should we talk about that now? We should just finish up on iron ore. I just say gold. Look, there's so many places we can go with gold. I think it's a great environment. We're focused on developers, producers. It's a lot safer, we feel, and But if you like that leverage, high risk, high return play, you, as you say, you've got to make sure that that company, that CEO has access to capital, understands that markets, has got a good product and a technical team to, kind of get after it, and they can actually market themselves properly and tell that story to all of the kind of key stakeholders or prospective investors. So we'll take that as read, that people listening to this know that that's what they're going to look for in a company. Anything else we really need to kind of cover off on gold before we kind of get into maybe the who?
Yes, I disagree that exploration is higher risk than development and construction. I know that when you're just going through commissioning on a good asset,
there's better be a good argument, because I totally disagree with you disagreeing.
The reason why is I'm not talking about kind of pre-discovery exploration where you don't know that you've actually got something, because that is incredibly high risk.
Yeah.
But when you are in an exploration team and you've got something, and you've got a tiger by the tail and you're drilling it out, so you don't need a massive team. The risks are small. You've got good geologists, and you've got that's all you need in your team. It's essentially quite a small team, and you can spend $10 to $50 million, and you can generate $500 to $1 billion worth of value.
Okay, well, I'll come back to my point. It's got to be a good team technically, and a team who's got a clear vision of how they go about doing this one. Because I've seen time and time again, I'd go 99.5% of the time, teams are a little bit blasé with allocation of capital, because it's not their money mostly. When you look at most companies, it's not their money, so perhaps they think about things differently. They're spending money on some sort of science experiment, and there are lots of good guys out. So there are good boys and girls out there. There's a whole bunch who don't know what the bloody hell they're doing. They're learning on the job on my dollar. So that's where annoys me.
Agreed.
Yeah?
However, when you get a good one,
yes,
exploration is absolutely the place to be, because who wants to have an HR team, an HR department? Who wants to deal with the staffing and the engineering, the risks? I mean, we've been talking about the technical risks of building a mine. It's a difficult, dangerous, dirty business that requires laser focus and attention for on a continual basis. You can't just kind of concentrate on it a bit and take your eye off the ball and then it'll all be fine. You've got to, every single day, you've got to have operational excellence. It's a mission, running a mine or building a mine.
It is. And I'll tell you what, we've kind of got little funds, and, obviously we're doing something with one of those investments together. We have learned so much, and you've been part of that learning process for us, quite frankly. So coming from the banking sector, where when companies came in to ask us for money, my first reaction was absolutely not. I do not want to give you any money. Say something intelligent to me, which will make me think I should give you my money. These conversations, these interviews that we do, seemingly harmless. Some pointed questions, a lot of dumb questions, but those are the things I'm going to catch these people out, especially when you talk to them time and time and time again. For them to kind of keep their story straight, it gets harder and harder for them. And, the bits in between those conversations where perhaps just saying things that they shouldn't, the real them comes out. You get a sense of that person, the CEO typically, or the C-suite more broadly, where you go, this is a smart person saying smart things, probably doing smart things by the sounds of it. I'm going to give them a look in. I'm going to, follow them, read what information they put out there, listen to what they say. And these interviews are really, really powerful for that. We've saved ourselves a lot of money. We've made ourselves a lot of money by getting that inside track on the man, the team, etc. So I love them from that point of view. But at the same time, there's a lot of crap spoken about out there. People drinking the Kool-Aid, and people falling in love with CEOs or falling in love with the story, and remembering this is your money, not their money. This is your money that they are pissing away, and you need to be on them 100%. If you haven't got the time to think like that or interrogate information like that, then you shouldn't be investing. I would say more broadly and specifically, you shouldn't be investing in this company that you don't know anything about. There you go. Rant over.
Rant over. I tell you what, site visits.
Site visit.
Blooming brilliant for getting to know management team. And it's funny enough, they can present, and then it's in the evening that you learn about the culture, about the attitudes. And sometimes I used to do kind of remote places. I'd stay for 2 nights, and there's the second night when people actually, their guard comes down. You really understand the company. Normally, to the point that you say, actually, I don't want to invest. And I went on one site visit where I met the guy in the airport, and I had a kind of a week-long trip ahead. And within 10 minutes of sitting down, I just regretted my decision. I thought, why? I know that this guy is an idiot. Why did I commit? So for the next week, I just read round every single thing, made me realize I was wasting my time, and the guy was.
But most investors can't afford the time off work to do that. So they have to rely on the information that's out there. So I think our point, which is probably well made and well received, is critical thinking. Challenge what you've been told. Challenge what you read. Don't take it as read. They're not on your side. They're not on your team. You don't need to fall in love with them. You haven't definitely not got a relation with them because they are incentivized differently from you. They'll be paid a salary, bonuses, options, all that kind of good stuff, most of which they deserve. But sometimes, unfortunately, probably all too many times, they don't because they're just there to kind of, rip the money out of the company. So folks, spend time working at who you like and whether you like the asset and all of the things that you put in your criteria for investing. Really have a rigorous assessment of it and challenge yourself. Be honest with yourself. I always say to people to have an actual honest conversation with yourself, because some of the crap I read on board chat rooms like CEO, etc. I've idiots just spouting off nonsense which they've got no. It's like some of the words, they're just all in the wrong order, and it's kind of clear that perhaps you invested in something you don't understand. So I like to say rant number 2 over. In fact, we should get back to talk about what we talk about, because it just these sorts of the sort of moronic investing style just annoys me, because it's your money, you should take care of it.
Can I put you onto the taking stock spot and ask you which companies that you've been interviewed recently, or maybe not even recently, which companies have impressed you? Let's go out with the positive one.
Go out with the positive. I like, and I know you like them too, so I'll start with that, which is Perseus. Jeff, very impressive CEO, doing business in Africa, which most people think is impossible to do. He's now got 4 projects, making money hand over fist. Just bought a company using cash. That's the kind of guy that you want to try.
I agree, and I think you should. He's the kind of guy, and the kind of company you should have in one's portfolio. But he's a $3 billion company.
Well, he is now. He wasn't when we first started with him. Interesting story. Just in no particular order, I spoke recently with Shane Williams over at West Red Lake Gold, which is the former Pure Gold. Gold was which was the sort of train wreck Darren LeBrun's project, which these guys picked up super cheap. That's always a good start. You talked about cost of capital earlier. They've picked this thing up super cheap. The gold's in the ground. They just got to work out how to kind of get at it in the most efficient way, and you can only do that by doing a lot more infilling, which is what they're doing. They're not rushing into it. They've kind of got a kind of cast of thousands on the board, it seems, but I guess everyone's bringing something to the table. So I kind of like that West Red Lake gold story. It'll be in production some point in 2025. I can't quite remember, but Shane is talk about straight talking, honest, no pretense. What a great guy! Like that guy a lot. Small one. A little small one. You heard of Ridgeline? Did you ever speak to them?
I think I might have done.
Yeah, they're sort of they're kind of cross between Prospect Generator Explorer, but what they've done is they've signed three massive contracts. Most recent of which was with South 32 for a project called Selena. So they're sort of US focused. As the guy, a young guy, smart guy, Chad Peters, very serious guy, but bright guy, and he's signed a project previously with Barrick. I think it's a Barrick and Newmont joint venture with something called Nevada Gold on one of their projects, or two of their projects, and now with South 32 as well. So it's kind of, and there's free carry right the way through to production. It's like I kind of like the that model, right? So they're doing their own exploration, working stuff up. In fact, they're not even like, say, oh, here's a DFS, do you want it? It's like they're working up exploration in a way that these big companies like. He goes and talks to them, and bingo, free carry on with their big balance sheets in a market like this. Smart, you can survive that way. There's a management fee. So you talk about a little company doing things the right way in this market rather than trying to do the same thing over and over and falling on their ads. So I like them in terms of small. One that keeps coming back, and we keep coming back to, and we did a site visit there recently. Talk about site visits changing your mind. Pan Global Resources, and I know you know the CEO reasonably well. You've interviewed him a few times. I just think Tim Moody he's from big company mentality, big company experience, and what they've got down there in the Iberian belt is super smashing. Surrounded by giants as well. Finding copper, bit of gold, tin, and zinc, which I'm kind of less enthusiastic about, but they've got some high grade stuff going on there. So it's worth something as a kind of polymetallic contribution. But copper's the name of the game, and I kind of like the way that they're going about it. It's very efficient. There's no fancy anything there. It's just old school. I'm not going to talk about uranium because I love lots of uranium companies. Got the WNA coming up next week. Going to get a catch up with some of the CEOs face to face again. How do you play this market? The market's doing all the heavy lifting, but what are they doing specifically? It's kind of interesting for me. I guess look, there's an Aussie one, Larvoto Resource.
What have you like? What's your take on lithium investments? So are you mostly out?
Mostly out. I'm like, you're totally out. You kidding me? We got lucky in the timing there. Like I say, we one of our best deals of the last years was Core Lithium, Aussie play. Drew from Sodal when we got into over 20 times return. It was amazing. But oh my goodness, what a market right now, eh?
Yep.
We got lots of companies, but we do try and stick with development and producer, like weighted towards development stores. I appreciate what you're saying. They can be susceptible to falling over as the next guy, and you'll know that from our analyst notes. We do try and do our work to understand which ones are more likely to succeed than others. But what can we do? But just very quickly on lithium. Obviously, we saw that whatever $80,000 end of 2022, or October, November 2022, and then all the way back down, and it's kind of killed off a lot of kind of billion-dollar lithium companies. They are in more realistic territory now, and all of the explorers struggling to find finance to actually move the project forward. I think exception being Lyft, one of the ones who cashed up, got $60 million, or I think it was about 60 million very early on in the game. They're still, running themselves off of that. But what do you make of that? Do you think the price ever going to recover enough to kind of see a recovery in the junior explorers?
4 years ago, I started the Con series of lectures, and to your great frustration, I still haven't finished.
It's true. Sure.
One of the things that I spoke about was avoiding these kind of minor metals, just because they're so volatile, and the price tends to go up and then come straight back down and never recover. Of course, it means that I didn't make 20 times on core lithium because I was saying, oh, no, one mustn't invest in these small metals. Not so good on a PA basis, but kind of broader academic sense, yes, kind of right overall. The problem with the minor metals are twofold. One is that they typically trade on a contract basis, so you don't have a terminal market on which to kind of get your pricing from. And they're typically very illiquid markets, so you can get a price squeeze which sends things up and then incentivize a lot of supply, and then it just comes straight back down again when you get a little bit of supply. And then the other thing, in a market like, for example, lithium, it's an incredibly immature market. There's no shortage of lithium rock. If you want to build a new copper mine, we've been mining it for 15,000 years, and all of the good copper stuff has been taken from the surface, more or less, and therefore you've got to look much deeper or be smart about how you look. But if you're looking for lithium, there's lithium everywhere. Every kind of craton has got lithium pegmatites. There's lithium in Australia, there's lithium in Canada, there's lithium in Zimbabwe, there's lithium in Ghana, all over the place there's lithium. There's no shortage of lithium. It's an incredibly immature market. Prices go up, supply, boom, you got it. And what happens is that now we've got all of that infrastructure. So as soon as the prices go, you're going to get the kind of the supply response. So yes, I'm afraid to say lithium, no recovery.
Right. And I'm gonna mention something here. Like if you're a uranium investor, you've been through it all. Certainly when we kind of came back in the uranium space in 2019, don't get me wrong, we made a lot of money on uranium, and we still hold a lot of uranium. It's great, but real education about small markets and looking at the supply fundamentals in relation to demand fundamentals. Helium, no laughing matter. Yeah, what's the joke? It's good, right? Chemistry joke right there, folks. And I won't be spoken to in that tone either. Yeah, so I think helium is the kind of next kind of high torque investment. Looking at pricing, looking at demand in the market, it's looking good. We've spoken to a few companies recently, spoken to Georgina Energy, an Aussie play, and it's kind of binary. They're kind of re-entering some old holes in Western Australia, and that'll either just be exponential or it will fall over on its ass, right? It's worth it. Throwing a few shekels at. Likewise with Helix, good CEO, English guy, love what they've got going on over there in the States with Bo, etc. And I think even Pulsar. I think that's that Tom, your buddy Tom.
Abraham Jones.
They've got something going on there as well. So the point is, there's not that many helium plays outside of the oil guys. And certainly not in the public market. So it's definitely worth a look. And if you can kind of research the helium space, it's really, I think, quite high torque. It's tiny.
It's
probably not going to be very liquid right now.
It's high torque, but you can look at tin, that's high torque. You can look at antimony, which China's just done a ban on. All of these minor metals, they are, I would say, tread carefully, because. But
that's my point. Don't bet the house on them. But it's definitely worth a little tickle on these things. So tin, I agree with you. In fact, we're talking. We had a chat with them, a company called Rome Resources this week. We've spoken about 3 times in the last 3 months. We kind of like what they're doing in the DRC. I add. You remind me. But they've been working there for 25 years. So they know what they're doing. Don't go big, but you might be pleasantly delighted on the upside, or if it doesn't work out, it's not going to hurt too much.
I made some good money on Pulsar Helium just before they drilled their well over the summer. I needed the money to repair a roof, and so every time I look at that roof, which is nicely redone, I think of Pulsar with very fond memories. I'm glad I'm out.
Well done you. Well, that's good. That's the name of the game, right? You're here to make money, not fall in love with the company, the CEO, or the projects, right? So well done. I do like that attitude to making money. It's people could like go chasing the extraordinary when, quite frankly, good is sometimes good enough and probably as good as it's gonna get. So if you're looking at a double, you've done extraordinarily well. Don't get greedy, or at least check out some of your gains and let the rest ride if that's your thing. But have a plan is the point. I think we're kind of sorry. What about yourself? Have you got a bunch of names that you want to sort of name drop in here? I mean, I could keep going, but what have you got?
Well, I did an interview with Arrow Exploration in January of this year,
Yeah.
and I really liked the CEO. I did a second interview with March. I bought some stock. It's their kind of exploration, but also tying into production, and they're doing well, and I think they'll continue to do well. They're oil in Colombia. I've got a very small PA position talking my book, but I like that. But in terms of the kind of the pure explorers, I don't own any shares in Lavras Gold. They've had a fantastic run. If you look at their share price, they've kind of up at $130 million market cap Canadian, so around $100 million US. The geologist who's on the ground is a guy called João Carlos Mola. He's a German-Brazilian that I did some excellent work with in 2008, or rather, I was directing it, and he was...
Typical senior management bullshit. Yeah.
We were told to evaluate a gold mine.
Yeah.
And my boss said he wanted to kind of buy this and get into production. And I said, I think we need to do an evaluation plan. And I said, Joao, can you help me on this? And he designed it, the plan, with David Holder, who's now with Barrick as their principal geologist, who I'd hired straight out of Imperial College, age 21 or 22. The three of us did this extraordinary evaluation of the gold project. I say the three of us, it was basically Joao and David did the work, and I just kind of floated in and out, drifted in and out. And we proved that there was no gold in the system. And he said to me, this was back in 2008, he said, Marlon, there's this area down in the southwest of Brazil. I've seen the geology down there. I'm pretty sure there's a gold discovery down there. He said, will you come and do it? And I said, oh, no, it's just one of my bosses is a private company, and he's more into iron ore. And he kept saying, I think that you should come down and have a look at this thing in southwestern Brazil. And I never did. And then Mike DeRose picked it up and started drilling it. And I saw Joao in PDAC in March, again, after a long period, 15 years or so since I hadn't seen him. The geology looks really good. And I think it's going to grow and grow and grow and grow. And that's not a $100 million asset. That's a $200, $400, $600 million asset.
What's the company?
It's called Lavras Gold.
Lavras, right.
Yeah,
okay.
And I haven't got shares in it, but I think it's going to do well. And then the other one I have got a few shares in is G2, Dan
Noon. Continue to do well. We like them.
Yeah, we like them. So those are my gold explorers, and they're not pre-discovery, they're post-discovery. You know what I mean?
Yeah.
I also like American Eagle, one of Stephen Stewart's companies. If you look at that share price chart,
did you get to the bottom of that, as in why that just dropped sharply? I didn't take a look.
Yeah. I think the market had massive expectations for it. It's gone from whatever it is, $1 down to from 70 cents down to 42 cents.
Right.
A year ago or 18 months ago, it was at 22 cents, and so it's still up from where it was, but it's not nearly up as much as it used to be.
Good.
It's a big system. They got some low copper grades and some high gold grades. The market shut the bed.
Yeah.
I think that's unfair.
Yeah, I think these kind of recalibration moments are really good for companies like that. Otherwise, they're in for a big fall. I think we put out a report last night on Aya Gold and Silver. They've crept up to they're down at $2 billion, and that is possibly one of the most overpriced companies that on the exchange that we've seen, and we back it up. So if people want to go to analystsnotes.com, you subscribe for free. You can get the kind of full report there, and on lots of other companies, and on lots of other technical aspects of that you might want to know before you start investing in mining companies. So yeah, I mean, I think IA Gold is definitely, unfortunately, overhyped, and maybe Gold Eagles kind of got away with it. I think if we're going to name check companies, I'm not invested in any of these. They're not clients. They don't pay me any money. Amex, I think you and I quite like Amex, or certainly you used to. I still continue to like what they've got there, which seems to be a lot of gold. Calamex seems to have disappeared from our radar somewhat, but I think there's something strong there. But I don't know what else they need to do to kind of get noticed, get funded, do what they need to do. But perhaps things are not. I don't know. We'll see. I maybe should dig into that. But one of my favorite is obviously the lovely Hayden Locke over at Marimaca,
doing great,
doing really, really well, building a company. Again, if you want to look at a CEO who knows how to make things happen and do things in the right way, bring in strategic investors, that's a good company, and I think still got a little bit of upside on that one. Heavily de-risked for sure. Merlin, I'm just kind of conscious of your time and your daughter. He phoned you.
Yes, I've got to go pick up my daughter.
You got to go pick her up. So why don't you go do that? Good to be back into taking stock, and maybe we can just do this a little bit more regularly. What do you reckon?
Yeah, good stuff. Yeah, and look forward to speaking to you soon. Thank you very much, Matt.